Hello and welcome to the Closing Beat, everybody. Happy Thursday to you. Hope you're all doing well out there, ready for the long weekend. Remember, the stock market is closed tomorrow for Good Friday, and so it'll be, 3-day weekend kind of thing going on there. That also means that the quarter is over. Now, we're financial advisors here at Jazz Wealth, and we pay attention to the endings of quarters with our long-term investors here, but I love coming to you guys day to day so we can talk about different things going on here. So we'll do that. I'll go through everything and then take your questions. Also, tonight we've got Wine and Wealth. So we're going to go over in more detail what I'm covering here today with you guys, talking about, hey, the market just did something really odd. I mean, really odd, very, very rare. So we'll go over a little bit of that tonight or today. And then for our Wine and Wealth, we're going to dive into the nitty gritty detail for all of you that like to do that sort of thing. And maybe go over some of the new things that are available for our clients who have just joined us. If you want to join us, go to jazzwealth.com. Thanks for joining. We are the official financial partners of Drum Corps International. Super excited about that. If you are a member, participant, educator, anything in that activity, I believe the press release will be going out next week in the email. So if you want to sign up for their emails or something, see how things are going, that'll be cool. Love that for you. All right, let's take a look at the stock market. There's not a lot to cover here today because the week really is over, but also the quarter, the month, it's all over. And we're basically going to start fresh with April Fool's Day on Monday. So look forward to that one. We have fun around here with that one. Hey, before I start with the stock market, another Fed member has come out and said, literally, hold your horses. We need to see inflation continue to go down, which it's not at the moment. We need to see more evidence of lower inflation before we would even think about cutting rates. So he used those words specifically to get people to go, wait a minute, all right, push the first rate cut even further back out there as well. Now, can you blame him? Really? I mean, can you blame him there? Inflation still not coming down as the Fed wants, but the consumer, you guys, at least on the surface, you're out there spending a ton of money. Right? We see it. I see clients doing that. I see it all around the place. People are still spending money. We also have economic news that came out today. Jobless claims just a touch lower than expected. That's good news. Shows a strong economy. People are willing to go out and work, then spend the money that they've got. GDP, our gross domestic product, actually revised higher today as well. So everything's good. Right? The whole soft landing thing, there was a lot of comments about people trying to, get their catchphrase in there, all the analysts and stuff, talking about how the soft landing turned out to be a lot firmer than people would have thought there. And all that really does, all those comments, that economic news, the Fed talking, all that really does is move a rate cut further down the road, which, for the moment, you guys seem more than happy with, right? The investor, people buying the stock market here at these prices, these overbought levels. Well, it would seem that everybody's still cool with that. We're fine. Yeah, let the good times roll, right? What does April look like? We're going to cover that tonight in our Wine and Wealth class, of course. If you look at the S&P, that is going to be officially 22 record closes for just this year, right? So just the trade, add up all the trading days this year so far, not weekends, not holidays, and you got 22 record closes there. We have closed the quarter up over 10%, right? 10.11%. All the S&P had to do was lose 1 point today, not 1 percentage point, 1 point. And that would have been enough to close the quarter under 10%. But no, that didn't happen. That means we've got 2 straight quarters here, back-to-back double-digit gains, right? That's basically where we stand. So when you look at the stock market here, the bad news is, and I'll go ahead and make this prediction. I like to share data with you, and I've got a lot of data to share with you here today, but I'm going to make a little prediction. Your uptrend is done, right? It's over, right? Now, it doesn't mean you can't have like a parabolic, blast off, what do they call that? The top. Blast off top sort of thing, where you have a few days where it's like, oh my God, the euphoria in the stock market is incredible. But, I want to go back over here. But when you look, we talked about this yesterday. We have an uptrend that's getting tighter. Is that good or bad? So from a technical standpoint, an uptrend that's getting tighter tells you that there's less and less buyers, but we still haven't convinced the sellers that they want to sell. Everybody that has a profit in here, right? So everybody that's happy with their profit, they're not fearful. They have zero reason to be fearful and sell for the profit if they're a shorter term trader, longer term investor, whatever. It's not until we start breaking below this pinching, wedging pattern. See the red that we got there? That's the very, very, very first time that anybody that follows this stuff will say, uh-oh, we're done. Right? This uptrend is over. Well, bad news is the way this is tightening here, we don't have many more days, right? We can have a couple more tiny days maybe in there, but we don't have much more room before a decision has to be made. So if you're looking for that bigger move in the stock market, whether it's up or down, you've been patiently waiting for more action in the stock market, my belief is it's about to start happening there. And that's purely because people believe in this stuff. People follow the uptrend. They recognize that slowing of the pattern there. Before we continue, let's go on over to our leaderboard here. You want to play Guess the Dow, jazzwealth.com/guess the Dow. Who's in the lead?
Anna. Is Anna in the lead? Anna's in the lead with Bia in second. And is it Bia or B? How would you pronounce that?
Oh, I'm 0-1 on this one.
Yeah, I was just curious.
Yeah, I'm gonna say B.
Okay,
It's
yeah,
B.
that's on brand for you. Yeah, yeah, I have Bia, but I don't know. And then yeah, Gabriel, Jamie, and Dean. That's your final five.
I'm going to go with B only because I only know one other B spelled like that. Do you know who that B is?
No, but this feels like a joke.
No, you might know. I don't know what you watch. TV. I don't know what you watch on TV when you go to bed.
It felt like it was setting up for a good punchline, but no, I don't know.
B. Arthur from the Golden Girls, man.
I don't know what that is.
The Golden Girls?
I don't know.
Oh, man, there's going to be some remake of that at some point. The Golden Girls, man. That was reruns when I was a kid, but... you know, if you ask Homer out there, he'd tell you I'm older than what I lead on to, man. People calling me old and fat and stuff, man. It's getting on my nerves. Hey, let's get started with the rest of the stuff here. Hey, so check it out. Back-to-back quarters of double-digit gains. Super, super rare. Do you know that that's only happened 7 other times in history, right? All of it. Just add it all up, right? It's not like the stock market was just opened yesterday, right? So 7 other times in history. This is the 8th time we've had back-to-back quarters of double-digit gains. Well, we thought we'd take a little bit of a look at that. So here is every one of those scenarios. So you got 1954, 58, 75, 86, 2009, 2010, 2012. You can add a new one on here. We've got 2024 as our 8th time ever. If you look back and you see, well, I'm just kind of curious, what happened after that? Did we have 3 times of double-digit gains? No, unfortunately, we did not. But when this happened, we did 2 things. We showed you the month going forward, and that's because we're starting a new month. We thought, well, let's see. What's that look like? You can see in blue here, in 1954, the next month gave you another 1.81%, a very small 0.38%, a string of losses in a row, a 2.26% gain, and then a little bit of a loss there. The average loss is actually 0.92% over the next month, so a slight pullback there if you're interested. We would need more than that, though, because remember, the stock market has not fallen more than 2% from the highs since the October rally started, right? So a lot of people looking for that. I mean, it happened. You could see there was a bigger pullback, but the average is 0.92%, the median 0.75% to the downside, both of them negative there. If you go the next 3 months, you say, well, that's fine. Okay, let's say there's a pullback here. I'd be fine with that. What happens after that? I'm a long-term investor. I don't really care. Well, you can see some of the returns there, and if you look at the average, it's 0.4%. The median is 1.67% over the next 3 months, and it was negative 2 times, right? 2012, 1975. Other than that, pretty positive going forward. So if you're going to use just that data, and please don't use just that data. It's just a fun thing to look at. If you're going to use it, though, it tells you that if there's a pullback, well, it's nothing to run away from. And we've done a lot of things like this where we've shown that, yes, okay, technically we're due for a pullback. Did you know the tech sector is actually the underperforming sector over the last 5 days? Wait a minute. We need tech to get us going higher. It's actually in last place. So if you look at things like that and you go, all right, we're weakening. I get it. Fine. The uptrend thing, the tech sector thing, the data you're showing, the gains we've already had. All right, Dustin, I get it. If you look at that, you go, if we pull back, is that not an opportunity rather than something to just throw in the towel and never, invest in something again? Of course. And if you watch our Jazzed After Dark the other night, we talked about how far would you want the market to pull back to be guaranteed returns going forward, both over the 1 year and the 2 year time period. That was a fun one. I had a good time with that one there. All right. Also, you could use our research site if you want to look up, hey, let's look at the S&P. How many times has it gained, which in this case would be more than 20% in a 6-month window? We have a tool in there that you could use to do that and kind of see what's going on there. Same thing. Yes, there tends to be a little bit of weakness. it's a buyable pullback there from what most people, or from what's happened in history. All right, so looking at the NASDAQ, well, there's an arrow. Let's see what we can do there. Maybe we can just continue, not have any problems. Okay. If you look at the NASDAQ there, same thing, the rally, the uptrending sort of motion of the market, getting slower, getting a little tired, getting a little less action. Not as many people want to pay up for that price. And of course, tech being in last place over the last 5 days has done the trick there. The Russell 2000 hitting new highs here today. In fact, the Russell 2000, and small cap value, the Russell 2000 itself, small cap growth, all the better performers. Just in the short term here, I want to keep pointing that out because that's what we keep seeing. And if you look at bonds, what do? It's the same thing. We're working our way back up to this. Now, some people, the technical people that really follow this, they would call this the jazz wealth play, right? Just throwing this out there. I'm totally making this up on the fly, but the technical pattern is real. In wealth, there's a W, right? And if you look at this, you pulled back, right? You got a series of lower lows. That's the first criteria. The second criteria is that there's a higher low after a series of lower lows. If you read like tech, candlestick tech books and stuff, you'll see all of this in there. Anyways, so what they look for is a series of lower lows, check, right? A higher low after that series of lower lows, check, right here. We did it, right? And then from there, they buy what the actual W, jazz wealth, formation is. So that would mean the buy point would be right here around 122.15, somewhere in there, right? So if you like that sort of thing, maybe we'll follow it just to see what's going on there. But other than that, I don't have much to go on with rates, and I don't have a reason to believe that all of a sudden prices are going to rocket higher, meaning rates will go lower. Where's that? We're missing something there. I don't think that's like the most exciting thing, but still fun to look at, so I thought I'd point it out. Crude oil also almost hitting, maybe hitting highs. I can't quite tell. Anyways, the uptrend very much developing like a hurricane, right? The storm is a little sloppy in the beginning. Look at all this mess when it changes directions. And then as oil, which is a trending commodity, starts getting in shape, the hurricane, right? It starts forming. It's really clear and crisp. The satellite images just blow your brains away. They're so neat. Well, you got this uptrend here now very much forming into shape. A lot of analysts starting to put over $90 price targets on crude oil by the end of the year. That's normal, though. Things like that happen. What else do we got? Hey, let's do some stocks in the news, and then we'll take your questions, because I actually don't have a lot of stocks in the news really to go on here. Home Depot is the biggest one of the day. They're buying SRS Distribution. That is a company that pretty much just does roofing and stuff. They're just massive, right? And kind of a fun story. If you ever want to look back and just do a little like economic study of a company, where they came from, right? And what their valuation was just, not before COVID, right? Incredible, the growth of this company. So Home Depot says, hey, the way to our future growth is by focusing on the person that comes in the store to buy supplies, because they're the ones doing the job. Not the DIY, me and you, that go in and buy a bucket of paint. They're talking about, hey, we want the guys that come in and they buy a whole roof, right? All the shingles and everything. They buy the tarps. They buy all the protective layers and stuff. We want to focus on the people that are coming in and buying the tools, the quality, higher margin tools, because they're going to do the jobs. They're going to be the tile setter, and they need a good product there. So they're just trying to conquer what they call the pro division of their business, right? So Lowe's does the same thing, where they'll talk about the retail side or the DIY side. And then, no, that's auto parts. So, okay, so in Home Depot and Lowe's, they call it the DIY side, and then they call it the pro side. So, the pros at what they do. The thing I was thinking about was the auto parts side of things. They call it the do it for me side, like Advanced Auto Parts and stuff. That got stuck in my head for a second. Anyways, that's what you got there. Alphabet was in the news. I don't know if this is like a stock mover. Obviously, didn't do much for it today. Kind of cool if you're a tech nerd here. They said they're going to add travel and trip like recommendations using AI based on what you book. Okay. I mean, that's kind of cool. I don't know. It's just something there. Oh, and lastly, Restoration Hardware, or RH, whatever, Prince. That's what they call it. So RH, yeah, they did well. I don't get it. I actually was telling Cody this. I might just like take the camera and go to RH and just like try to film it and figure out like what are they doing here? Like how are they selling $16,000 couches? Apparently they're doing it, and they said today they expect to see double-digit sales growth. You kidding me? Why do we need double digits if we've got these kind of margins? Fascinating. This is one of the more fascinating companies in my mind because I don't see it. I don't see it, man. I wish I could. Anyways, so they enjoyed a nice 17% gain today, and that was all earnings related there. Yep. Why do all the big firms push BlackRock products? Oh, I don't know if that's true. Like, and they can't actually push just one. There's the kind of laws around that. I would think if you looked at that, though, the bigger firms probably push more Vanguard than anything. And I would say T. Rowe Price is in second place, just looking through so many of these accounts that I do. Yeah. Oh, back to work for DLM, man. All right. Yeah, you don't want to lose your job. Need that money to invest. That's what you got to do. Yeah. The folks that buy the kitchen sink, hey, you know, that doesn't mean you're a pro. I like doing stuff, but Home Depot's not necessarily focused on me right now. You love the Home Depot credit cards? Oh, okay. I don't have one myself. I do not. Any news on Albermarle? Big rally last couple days. Okay, so look, this is very similar to what Disney did. Now, it's been a while, but if you look at Albermarle coming off the lows, a little excitement here after this earnings sort of slop that they went through there. So nothing more than just people buying dips. There's no news. There's nothing to say it should be rocketing higher, a little short covering maybe, and also people saying enough's enough. That's a good value for the company there. So that's all I got because you're right. There's nothing to go on. Darren says, hey, would now be a good time to make withdrawals from a 401k for the rest of the year if the market is at tops? So I think what you're saying is, you know, I'm going to withdraw X number of dollars throughout the year, and I was doing so much a month, and maybe I'll just get ahead a couple months. That's how I look at it. If you know you take out so much every month from your 401k, now you've got, you know, the end of this quarter, would you go, okay, let me maybe just get a quarter ahead? I don't blame you for that. Also wouldn't blame you if you said, no, I'm going to stick with the monthly withdrawal thing, but I am going to take some of these dollars and just go a little bit stable value, guaranteed income, whatever those funds that you have in there that are called, provided that when you look at your whole plan there, you can afford to do it. Excuse me. Still got a little bit there, just a little bit I can't quite get over. Yeah. Frost says, is it true the stock market cannot be closed for more than 4 days in a row? It cannot be. So that's including the weekend. So we cannot have something. This is the law. We can't have like tomorrow. Is it tomorrow? Yeah. Tomorrow's Good Friday. Stock market's closed. Then you have Saturday. Then you have Sunday. The stock market cannot then be closed on Monday, right? There's only one time that's ever happened, and that was during September 11th for obvious reasons. But there you go. Is there a site to see how ETFs last quarter, prior year, and prior 5 years? See how what? You can always go directly to the ETF site itself, but I'm not sure what you're, just to see performance if you like. Yeah, you could use anything for that. Yahoo or FinViz or Morningstar or something, whatever your favorite is. I picked up JPM at a 117. Oh, those financials. Can't complain about those, especially the big guys like this JP Morgan. 117, decided to trim your position. Yeah, there's nothing wrong with that. Now, here's a question. Why was it here? Why wasn't it here? Or here? Or here? Or here? Right? Why was it there? That's the one thing. If you're going to be a stock picker, though, just have those kind of rules in place. I'm going to go for X amount of return. I'm going to try to triple my total risk. I'm going to try to get 8%, 12%, 10%, whatever it is. We've done a lot of classes on that to help you think specifically about when to take profits instead of sounds like a guess. Yeah. Kirk says, because of that election coming soon, I was going with the emojis today. Good job. You're thinking about dollar cost averaging into the markets, or you are dollar cost averaging into the markets instead of a lump sum over the next year. Oh, I don't blame anybody for that. And you can pick on me all day with this, time to market, blah, blah, blah. Go ahead. I'll take all the bullets you want to throw at me. But who wants to put a big lump sum of money in the market right now? I mean, you common sense, right? We can see where this is. That's like JP Morgan. Hey, like now you want to put a big lump sum in there. So I get that. I'm 100% with that game plan there. Yeah. Surprised you ain't seeing much ripple from the Maryland situation. Yeah, that's a tough one. I'm fascinated by that because that happened here before I was born, but it happened here in Tampa, which is why we have the Skyway Bridge now. That's, I believe, the last time that's ever happened. But I think it's the biggest issue, if any. Think about who ships to that port. Let's say the port's down for a while. I'm not sure why it would be down for a while once they can clear a little path there. I'm not trying to oversimplify it, but who ships there? What's coming into that port? Is it cars? Could it be? Could it be some of the cars there? Could it be some of the companies right just to the east of Iowa? Just draw a line, just to the right of that Bible Belt, like they draw it out. Maybe sort of blending into the Bible Belt. Could it be those companies? Right? That's where you're seeing the issues there. Nvidia at a top for now. I don't know. It's lost all reason for anything, right? It clearly doesn't like the $1,000 number, but I'm not going to be the one that guesses. Yeah. Maxed out that IRA and 401k. There you go. Well, it doesn't mean you have to invest it. Could be, you could put it in just to get it past, well, you don't need the deadline. So you could put your money in for 2024, but it doesn't mean you have to go investing it all in one shot. You could do that. Yeah. There's some changes coming to the S&P 500 and the S&P 400, if you like to follow that sort of thing. Otherwise, if you like the short-term, real quick sort of nibbles of financial advice, check out Haley's channel on YouTube, Dose Straight. She's doing a lot of great videos there, and I mean a lot. So she's working them out. She is our advisor to the younger crowd. She speaks their language. She knows what they want to focus on, so she deals with that. And so if you're younger and you're looking for a financial advisor that can actually relate to you, that's going to be your girl. We're all a team here, though. We work together, but she's killing it with that. Yeah. There has been bridge collapses, yes. I'm talking about because a boat ran in, like the shipping container, like we saw it happening like 5 minutes before, and they can't stop the thing. That's not a good one to see. Hey, anyways, I want to wrap it up there and get ready for Wine and Wealth here tonight. It will be a Jeffersons and Wealth type night, if you don't mind. I'm feeling better now. Can't wait to hang out with you guys. We'll go over a lot of the details about forward market performance and what's sort of seasonal, what to expect. Let's look at some of that geeky stuff. You guys enjoy the rest of your evening. Have a great Good Friday as well as Easter if you're with your family and hunting for eggs and all that. I hope there's money in there for you, and we will see you next week.